Okay, let's dive into this. Welcome to The Explainer. Today, we are taking a look at a massive, almost invisible upgrade that's happening right now to the infrastructure of money itself. Usually when we talk about global finance, we think of it kind of like the plumbing in your house. You don't really look at the pipes, you don't check the water pressure, you just turn the tap and expect the water to flow. But right now, a coalition of financial titans is actively ripping out the legacy pipes of global finance and installing an entirely new system, literally while the water is still running. We're going to break down exactly how they're doing it and why it absolutely matters to you. Here is our roadmap for today. We'll start with the invisible financial upgrade where they're tearing out those old pipes. Then we'll look at the giant and the startup building the new machine. Head inside JPYSC and Strium to see the custom architecture, discuss winning the institutional lane, explore this fascinating concept called the global neutrality gap, and finally, look at how all this prepares us for machine money for AI. Section 1. The invisible financial upgrade, replacing the pipes. To understand the solution they're building, we first have to look at the fundamental problem with how multi-million-dollar corporate transactions are actually settled today. And this brilliantly illustrates the massive dilemma that institutional banks are facing right now. Think about the legacy SWIFT banking system. These are basically the rusted iron pipes of global finance. It takes days to clear an international trade, the percentage-based fees are just incredibly high, and honestly, it's just clunky. So you might be wondering, why not just move everything to a public blockchain like Ethereum? Well, for a multi-billion-dollar corporation, a public blockchain acts a lot like a volatile toll road. They suffer from these totally unpredictable gas fees that just spike whenever the network gets congested. Plus, because public networks are, open to everyone, banks run into absolute compliance nightmares trying to verify the identity of everyone in the liquidity pool. A corporate bank simply cannot operate on a network where fees can suddenly jump 10 times higher, or where they might accidentally transact with a sanctioned entity. It's just a no-go. Section 2. The giant and the startup, building the machine. It takes a massive amount of machinery to solve this problem, requiring a totally unique partnership that bridges traditional finance and Web3 innovation. The first half of that partnership is SBI Holdings, and they are an absolute juggernaut in Japan's financial system. While a lot of us might think of traditional brick-and-mortar legacy banks, SBI has quietly built a digital empire. They capture a staggering 60.3% of all individual stock trading value in Japan. How did they achieve that level of absolute dominance? Through a hyper-aggressive strategy they called the Zero Revolution. They completely eliminated trading commissions for domestic online stocks. They literally just absorbed the short-term loss to entirely capture the market. And that strategy fed directly into a brilliantly designed, frictionless walled garden ecosystem. Across their broking, digital banking, crypto exchanges, and insurance arms, the SBI Group serves over 50 million customers. To put that into perspective, Japan has a population of roughly 123 million, so that reach is just staggering. They boast a 70% cross-sell rate. If you open a stock trading account, the automated cash transfers make it so incredibly easy that you're probably going to open a digital bank account with them too. This means when they launch a new digital currency, they don't have to go hunting for users. They just flip a switch for tens of millions of existing customers. But to build a blockchain capable of actually handling that immense institutional volume, SBI needed a specialized engineering brain. Enter Startale Group. Founded in early 2023 by Web3 entrepreneur Sota Watanabe, Startale very quickly secured a massive $63 million Series A funding round, backed directly by SBI and Sony. And what's cool is they aren't trying to build one blockchain for everything. They are basically pouring the concrete for custom bespoke networks, like Sonium for Sony's entertainment footprint, and, crucially for us today, the Strium network for SBI's institutional finance ambitions. Section 3. Inside JPYSC and Strium. The custom architecture. Let's shift our focus to the actual mechanics of these digital tokens and the exchange layer network they're launching together. So they are launching JPYSC, which is a fully regulated Japanese yen-denominated stablecoin. So the crucial point is how this token is actually legally structured. Thanks to Japan's incredibly rigorous 2023 Payment Services Act, JPYSC utilizes what's known as a trust bank safeguard, issued by SBI Shinsei Trust Bank. Think of a standard retail gift card, right? If that company goes under, your digital credit might just vanish into thin air because you're an unsecured creditor. JPYSC is the exact opposite. By law, the trust bank must maintain a strict segregation of customer assets in a ring-fenced vault. They cannot lend it out for yield. It guarantees a true one-to-one redemption into fiat yen. This bulletproof legal security is exactly the kind of guarantee multinational corporations demand before they're willing to move millions of dollars on chain.
But a secure token needs a secure highway to travel on, which brings us to Strium, the custom Layer 1 blockchain Startale built for SBI. It uses this really fascinating dual access model. It's essentially a hybrid system. It gives institutional participants heavily guarded anti-money laundering compliant walls to operate safely inside of, but it also features an open layer that allows external applications, and eventually retail traders, to safely interact with these tokenized markets. And unlike a slow, glorified private database, Strium is an exchange layer engine. It has built-in corporate automation. For example, if you hold a tokenized stock, the blockchain can automatically calculate and distribute compliant dividend payments directly to your wallet using that JPYSC stablecoin. It completely eliminates manual back-end clearing and settles trades with near-instant finality.
Now, because moving billions of dollars instantly sounds like a regulator's worst nightmare, SBI and Startale are utilizing a highly disciplined, phased rollout. First, they're starting in a synthetic sandbox, strictly testing high-load speeds using stock derivatives and foreign exchange. Once that's proven, they'll move to a core asset rollout with real tokenized shares before finally attempting to achieve true global scale. They are doing everything perfectly by the book to satisfy Japan's notoriously stringent financial watchdogs. Section 4, winning the institutional lane, the domestic race. While this technology is absolutely groundbreaking, we do have to look at the competitive landscape because SBI isn't the only player racing to digitize the yen in the Japanese market. The domestic race is essentially splitting up into distinct lanes. You have JPYC, which launched first and currently dominates the retail lane, mostly focusing on peer-to-peer transfers. You have Japan's legacy megabanks like MUFG and SMBC running their own consortium pilots, and you have tokens like eJPY targeting local enterprises. But JPYC? They are aggressively and exclusively targeting the high-volume, multi-million-dollar corporate and B2B lane. They firmly believe that institutional treasuries and cross-border settlements will ultimately drive the most significant on-chain volume. And they are moving incredibly fast. The target launch window for JPYSC is the second quarter of 2025, pending regulatory approval, of course. But with SBI's massive, pre-existing ecosystem of 50 million users ready to be plugged into this network, their absolute biggest hurdle, which is always distribution, is effectively solved on day one. Section 5, the global neutrality gap, a geopolitical safe haven. Dominating Japan is one thing, but to understand the true ambition of this project, we need to zoom out a bit and look at the massive macroeconomic implications for global supply chains. When you look at the global map of digital currencies today, it is heavily polarized. On one side, US dollar stablecoins dominate about 99% of the market. But for international corporations, relying entirely on the dollar exposes them to shifting U.S. regulatory policies and sanction risks. On the other side is China's digital yuan, the e-CNY. It is highly efficient, but because it's a central bank digital currency, Western-aligned nations view it with skepticism due to concerns over state surveillance and control. This polarization creates a massive neutrality gap in global commerce. JPYSC aims to fill that exact void. Because Japan offers strict rule of law without overt government overreach, and JPYSC is issued by a private trust bank, it provides a very safe, politically neutral middle ground for international B2B trade. Now, what's really interesting about this is the sheer economic advantage it provides. Startale CEO Sota Watanabe highlighted that a primary goal for JPYSC is to leverage the yen as a low-cost funding currency for the global on-chain economy. Instead of paying a premium for dollar-denominated capital, global corporations can borrow yen cheaply to fund their on-chain operations. They can buy tokenized real estate or settle international supply chains. It's just a highly cost-effective, perfectly neutral alternative. Section 6, Machine Money for AI, the future movers. Everything we've discussed so far makes perfect sense for human corporations. But the most futuristic application of this highly regulated digital infrastructure isn't for humans at all. We are rapidly moving toward a global economy where AI agents will be autonomous economic actors managing highly complex real-world logistics. Imagine an AI managing a massive global shipping route. It needs to purchase server space, trade data, and pay customs fees the exact millisecond a shipping container pings a port authority. A standard corporate credit card fundamentally cannot support this. Legacy systems require human identity verification. They operate on banking hours, and their fraud detection would instantly freeze that kind of high-frequency autonomous activity. Machines need machine money, a programmable, regulated currency that moves at the speed of code, 24/7, completely without human friction. Startale's vision is that JPYSC on the Strium network will serve as the exact financial rails required for this autonomous AI supply chain,
The hidden plumbing of our global economy is being completely upgraded right beneath our feet. The speed and the cost of global business are being totally rewired. But as we transition to an infrastructure where autonomous AI agents use stablecoins like JPYSC to instantly execute multi-million-dollar cross-border trades, it leaves us with a really profound question. If machines become the primary movers of millions of dollars, what does that mean for human oversight? How will international regulators manage a global economy where machines acting on incredibly complex algorithms become the dominant financial actors? We aren't just changing the pipes, we're fundamentally changing who or what is turning the tap.